Hello, everybody. This is Toni Turner, and welcome to the market now as of lucky Friday, August 13th at about 12:30 p.m. Eastern. Well, U.S. consumer sentiment dropped sharply in early August to its lowest level in a decade, and a worrying sign for the economy as Americans gave faltering outlooks on everything from personal finances to inflation and employment. The University of Michigan said its preliminary consumer sentiment index fell to 70.2 in the first half of this month from a final reading of 81.2 in July. That was the lowest level since 2011. And on that less than cheerful note, let's go on and look at three charts that could give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $445.49, once again up near its all-time high. It made another new all-time closing high yesterday, which was August 12th, at $445.11, or about $4,451 on the S&P 500 itself. So again, nothing much to complain about at all here. The market is certainly, you can't argue with new highs, that's for sure. That report I just talked about, that's kind of could give us a little hitch in the giddy up for the next few weeks here. Something interesting I was looking at today as I kind of backed up and looked at this chart. I think I told you all I used to have a trading teacher, and early on, and he would actually yell at us and went in a classroom, and he'd say, "Stand up, back up, and look at the big picture." And we'd get out of our chairs and we'd dutifully move back. And you know what? He was right. When you look at a chart from further back than just hunched over your computer, you can see things that you might not notice if you hadn't done it. Anyway, so I kind of backed up this morning, and so I was looking, kind of interesting. If you will note here, look at this move up, and we're talking about how long, I wondered how long can price, it's moved above this 20-day moving average here for the last, ever since the end of April, 1st of May. And I thought, how long here can the SPY stay above that 20-day moving average without pulling back? And so I measured each one of these swings, up here and back down, up here and back down, up here and back down. And we can go about 3 weeks here in the last, these last two moves. We can go about 3 weeks above the 20-day moving average before price pulls back. So that just keeps something I keep at my elbow, just to remind me to keep watch on my stops and keep a close eye on the market here. About 3 weeks. Well, right now, since price moved down here, we're right at 3 weeks here. So we'll have to see what happens. The RSI right now, if we look at the 14-day RSI, we see that is right up to the 70 line, which of course the 70 line is overbought. And that's kind of interesting. We have new resistance up here now, so we're going to call new resistance at 446. We have support, potential support here, of course, at that 20-day moving average, the red line, at $439 and change. We have, of course, the slightly more powerful 50-day moving average in green, and that's coming in at $432 and change. So, of course, nice support here. Support we've had, 200-day moving average coming in at $397.82, about $398. So, as always, you know the drill. In the coming week, keep an eye on that SPY and see if it can remain above the 20-day moving average, and of course the 50-day moving average. And if it does, of course, that's bullish. Just keep an eye on your stops, please. Okay, our next chart is going to be a chart of the Invesco QQQ. As you all know, this is the ETF that represents our very important NASDAQ 100 index, a major force in the market. Top holdings include Apple, Amazon, Google, or Alphabet, I should say, and Facebook. Now, when I captured this chart today, the QQQ was trading at $368.65, also sitting atop its 20-day moving average. It bounced off the 20-day moving average. It moved up here. And let's take a little better look at this. It started moving up here and back in the beginning of June, and it walked right up that 20-day moving average. And look here, it's trading at a premium to this line, meaning there's space between the 20-day moving average and the price movement. It's not sitting on top of it. Price is trading at a premium to the 20-day. Then it moved down here on July 19th, down to right about 352. Then it jumped back up over the 20-day moving average. But look at the difference now. Look at the difference now. Since the middle of July, instead of trading at a premium above the 20-day moving average, now it's the QQQ, it looks like it's getting tired here. It's like, well, I could run up above it before in the end of May and June, but right now all I can do is just walk on it. So he was running a big race here, and now he's slowly walking, trying to catch his breath, we could say, or she's trying to catch her breath. So that energy is dissipated somewhat. It did, however, back here on August 5th, the Qs closed at another new all-time closing high at $369.67, and we're right close to that today. Resistance will remain here at 370. And of course, now we've got support, hopefully potential support at this, just three points lower than where it is now. We have potential support on the 20-day moving average for the Qs at $365.56. A little more support, potential support down at the 50-day 50-day moving average at $356.33 right now. Then we've got resistance down here. We've got I drew a trend line for you connecting some lows here, and that support comes in at about 338, and then of course we've got the 200-day moving average at 326. So hopefully we won't need any of these two down here anytime in the near future, but one never knows. So please do be careful. Again, it looks like the Qs are losing a little energy here. Also, please note that if interest rates start up, it's the tech stocks and the momentum stocks that get hurt before the non-cyclical companies get hurt. So staples won't get hurt as much, say, as tech stocks, for example. That's a very general approach, but it's kind of the way you want to think. Okay, so let's go on to our final chart here. Our last chart for the day is a daily chart of the SPDR S&P Metals and Mining ETF, the XME. The XME has 30 holdings in it, including Alcoa Aluminum, Nucor, Steel Dynamics, U.S. Steel, Freeport-McMoRan, that whole group. So I kind of looked, I didn't find a lot of charts I like today. This one I do, and I did a little research on it. Now, when I captured this chart today, the XME was trading at $46.15. And if we look back, we say, well, where's recent highs? Recent highs were up here, right up here. And that was in June, and these recent highs were up at $48. So up in $48, May, June, fell back below its 20 and 50-day moving averages, excuse me, below this support line that it created when it made this top here, almost a little tiny triple top. Then fell back down here to these lows of $38.65 on July 19th. July 19th, a lot of things kind of fell down. Then it rebounded, the XME rebounded back up here, back to prior support, moved through that support, up here to about $46, back a little and back up. So if you back up and look at this chart, what do you see? You see that potentially here, we have an inverse head and shoulders, which is a positive pattern, definitely. No guarantees, but certainly positive. So again, I saw this. I see that the XME is sitting above the green line 50-day moving average, above the 20-day, which is trying right now to cross over the 50-day. That's bullish. You see that we have this support down here, about 44 and change. See how it was support here, then turned into resistance. Okay, was support back in April when price was sitting on top of it. Then price fell below it. Then it was resistance. That's what happens with support and resistance. Comes back up, was resistance, and this time price managed to get over it, and again now trading at 46.15. In the coming week, you know the drill again. If the XME can stay above the 50-day moving average, which is now coming in again at $43.66. So if it can stay above the 50-day moving average, and if the market stays reasonably positive, I will add a small position of the XME to my trading portfolio. My initial stop, I meant to put a red line down here. My initial stop is going to be down here at pretty tight at $42.75. So $42.75 is my initial stop. Now, when and if the XME rises above these prior highs, we'll call it 48. If it rises above those highs, I will add to my position, and of course, by then my stop will be a trailing stop. So you may want to keep an eye on the XME in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, go ahead and check out my trader training programs. I think you're going to like my simple strategies. They are targeted to swing trading, trend trading, bottom fishing, and many, many more. And they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, or here's the link on the screen right here. Well, my cursor's sticking. Or just simply go to the orange button below. And now let's go on to some final thoughts here. This week's question is, have I allowed the achievement of my trading goals to turn into stressful self-pressure? Have I allowed the achievement of my trading goals to turn into stressful self-pressure? And believe me, that happens to a lot of traders. Now, this is usually the case for traders whose fear of failure and making trades, losing trades, drives their motivation. Fear of losing trades. For these traders, motivation and self-pressure are the same things. This mindset can lead to intense symptoms of stress when your goals are not achieved. And at the extreme, this form of unhealthy motivation turns into an obsession with and a desperation for success. The trader considers anything less as total failure. However, traders on a healthy, motivated track enjoy a whole different experience. Their goals are challenging, but they're always realistic, which means they are stretching themselves, but not to the breaking point. And please know, people, all of us have losing trades. I have losing trades. Any trading teacher you meet has losing trades. Some just don't like to admit it. Traders who are on a healthy, motivated track, they don't chase trades as a desperate attempt for a winning trade. They don't make revenge trades. Have you ever made a revenge trade? I'll get back on the market. I'll get back to the market on this. Market shouldn't have taken my money. They cherry pick their trades and would rather make 2 A trades than 5 C trades, and that's me. And I think you should think about that. Make 2 high quality trades instead of 3 or 4 or 5 maybe it's going to work trades. They don't snap at family members or loved ones after a losing day. They gain satisfaction from planning every trade and then trading that plan. As I say in my books, plan to trade well, not to make money. And if you trade well, the money will come automatically. So how much do you enjoy your own motivation or the reasons you decided to become a trader in the first place? Do you go to bed looking forward to the challenges of the next day? Or do you lie awake worried about the losses you could endure? If you find yourself wondering how or why your original motivation turned into stressful self-pressure, please stop trading. Then consider reassessing your goals and rewire your approach to one of less stress and more satisfaction. And that, believe me, is a much easier path to success. Finally, please know that if you'd like to become a consistently winning trader, this is a great time to check out my trader training programs. To see all of my online programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.